Hey everybody, this is John. Welcome to the free video. We're going to look at F5 as an earnings play and just the markets in general. Well, we'll focus on F5 here. So F5 is a kind of a classic earnings play setup. You can see going into it, a lot of volume here on the calls and the puts. And what we're most interested in is essentially extrapolating that information plus a lot of other information and setting up what I call a high probability earnings play. Obviously, now the one guarantee with earnings is that the implied volatility drops very quickly. That's the one thing and the only time we know that something specific is going to happen. From there, we try to determine, is the reaction going to be neutral, bullish, or bearish? Based on everything that we're looking at today, we were looking at more of an edge that F5 would go higher, but we didn't know if it would go through the expected move or not. So based on that, we set up what I would call both conservative and aggressive plays. So a conservative trade is obviously going to be something where the risk is defined, and that was done with this spread where we sold the 121 put and bought the 115 as protection for $1.95. This way, if the stock would have tanked, our risk was limited. Now, what I also did is I sold the 121 puts naked 30 times. Now, that's not something that you want to do with a small account, or if you're inexperienced and don't know how to manage that if it doesn't work out. Because how you manage this is after hours, you actually have to go in and short stock to hedge if it exceeds your risk, okay, which is obviously tricky. Part of how you manage this too is you trade smaller size, okay, because on something like this, I'm going 30 naked contracts. It's going to require 59,000 in margin. You need a big account to do it. You don't want to do that in a small account. And then we also bought after hours. I tried to buy a dip. We didn't get it, but we got a little bit of a pop. Bought 1,000 shares with the idea that I'll be able to sell them at a higher price in the morning. Okay, so that's how we structured F5. Okay, and then for Amazon, this is one that I really like. This is one of my favorite longs. We had a nice, this is an all-time high. We've had a pullback to the snow line. We broke above the high, the low bar here. So I'm looking for this to potentially run to new highs into earnings, which are next week. So to take advantage of that, just did a kind of a short-term buy today against the 39-minute squeeze, where we sold a put credit spread, the 740, 732 put credit spread, and then bought some calls with the idea that we could flip them out tomorrow. So this is something I'm not looking to hold into earnings, but it is something here that looking for kind of a shorter term kind of a play. So a lot of this right now obviously is centered around earnings. What does a stock do on average going into earnings? Okay, what does a stock do on average the day of earnings, and what does a stock do on average after earnings? So I'm going to talk about all of this tomorrow. So it's Thursday from 6 to 8 o'clock Central Time. That's, of course, 7 to 9 East Coast Time. I believe that this quarter, that the markets are going to be unpredictable and volatile. That being said, the earnings will actually be predictable and very manageable. So I want to talk about different strategies that I'll be using. The last 2 days I've done them pretty hot and heavy in the room. For those that are uninitiated earnings, they had a lot of questions. This is the webinar you want to go to. I will answer your questions. And for those of you that are experienced, I'm also going to be reviewing a lot of the tools that I use. Here's the bullets. You can read through them. But this is going to be essentially, if you don't want to get lost when you're following the plays, you definitely want to attend it. And even if you're not in the room, this is something you can come in. It's free education, and just learn how to take advantage of earnings, because it's 4 times a year. You have a very predictable thing that's going to happen. Implied volatility is going to revert back to the mean. It's one of the only times in trading when you know exactly what's going to happen. And these are different strategies to take advantage of that. All right, simplertrading.com/earnings. Looking forward to seeing you there.